All right. Good afternoon, everyone. Thank you so much for being patient while we get everything set up today. My name is Susan Brooks. I am with RCM of Washington.
And I am Mark Augusto, Supervisor of Intake and Outreach for the Department on Disability Services. And it is our honor to welcome you to the second session of the Bridging Aging and Disability Network's Future Planning Lunch and Learn series.
The purpose of the DC Bridging Aging and Disability Networks and Racial Equity Community of Practice is to better support individuals with IDD as they age while maintaining dignity and rights, to better support and connect with aging caregivers, family and paid caregivers like direct support professionals, home health aides, to build capacity for racial equity across aging and disability networks, and to build sustainable relationships between the Aging and Disability Service Network.
At today's event, we will be offering interpretation into Spanish, American Sign Language, Mandarin, and Amharic. If you need interpretation, please click on the interpretation icon and choose the language channel you need. Please use the chat for any questions. We want to remind people that this session is meant to provide an overview of resources. We can answer general questions, but cannot answer questions to person-specific questions. Instead, we hope the resources provided today will help you connect to the organization that you can help.
And with that, it is my honor to introduce Dr. Marquita Siller-Tyler, Certified Benefits Counselor at the Rehabilitation Services Administration, or RSA, who will provide us with an overview on benefits and financial eligibility. Welcome.
Thank you. Let me share my screen. Is everyone able to see my screen okay?
Yes, we are.
Okay, great. Okay, so this is just going to be a quick overview. Well, I don't know how quick it's going to be, but it's going to be an overview of benefits counseling and touching on both SSI, SSDI, and some other benefits. I am Dr. Marquita Siller-Tyler, Certified Benefits Specialist. I work under Mark Augusto, and let's get started. So SNAP eligibility, people may have known SNAP previously as food stamps. So now with SNAP, if a household is receiving temporary assistance for needy families or TANF cash benefits, TANF non-cash benefits, or supplemental security income, otherwise known as SSI, the SNAP household is considered categorically eligible for SNAP or automatically eligible for SNAP. Categorical eligibility for SNAP means that the household has already been determined eligible for other means tested programs. Most district residents that are applying for SNAP are determined to be categorically eligible. So the SNAP, or the Supplemental Nutrition Assistance Program, has a lot of different moving parts to it. So it's usually something that you may want to attend another session that specifically focuses on just other benefits, but we're just going to give you enough to kind of get a brief intro today. So for a SNAP household, the household is everyone who lives together and purchases meals or things together as a group. Spouses and most children under the age of 22 are automatically included in this. I'm just going to see if I can minimize this. There we go. Thank you. Okay. So for SNAP income limits in general, each SNAP household member's income is counted together and compared to the income limits to determine eligibility. So they take everybody in the household's income, they add it together, and they have a chart, which I'm going to show you in a second, as to how they determine whether or not they meet the eligibility requirements. So income includes money that is earned from a job or self-employment and money received from sources like the United States Social Security Administration or retirement. And households must meet both the gross and net monthly income limits for their household size. Table 1, I'm going to show you in a second Households with a person aged 60 years or older or a person with a disability only needs to meet the net monthly income limit. Now, the gross income means that a SNAP household's total income before any deductions is being looked at, and the net income means that a SNAP household's total gross income minus any allowable deductions is what they're going to focus on. So here is the table that I mentioned earlier that they're going to utilize to determine eligibility. So household size, as you see, is here on the left, and then the maximum gross and the maximum net income that's allowed for each member. So a few SNAP income deductions. So to determine SNAP households' monthly net income, there are certain allowable deductions that are subtracted from the household's gross monthly income. And some of those deduction amounts are set by the federal government and are subject to change each year. So they're subject to what's called a cost of living adjustment each year on October the 1st. So a 20% deduction is applied to earned income, which is money that you get from a job or any self-employment that's going on, and a standard deduction is applied to all SNAP households. The standard deduction is $193 for households with 1 to 4 individuals and $225 for households with 5 individuals and $258 for households with 6 or more individuals. This may be higher for some larger households. A dependent care deduction when needed for work, training, or education can also be applied, and legally owed child support payments is also taken into consideration. So excess shelter costs are more than half of the household's income after all other deductions have been applied. So the excess shelter deduction is capped at $624 unless one person in a household is either elderly or disabled. And each household receives a standard utility allowance deduction of $345, which is updated every October 1st to account for utility costs such as fuel, electricity, and water. In addition to the standard, a household can claim the following allowable shelter costs: rent or mortgage payments, interest, taxes on the home. And households with a person aged 60 years or older or a person with a disability can also deduct any out-of-pocket medical expenses of more than $35, but these cannot be expenses that are already covered by insurance or that someone else has already covered for you. So the limits for resources associated with SNAP, resources are things like bank accounts, money market funds, certificates of deposit, and stocks and bonds, and some things never count, such as the value of your home. And most district residents are applying for SNAP are determined categorically eligible, as we mentioned earlier, and they do not have a limit on resources. All right, so if you apply for SNAP, the district will review your information to determine if a resource limit applies. For households that have a resource limit, households may have up to $2,750 in countable resources. And if the household includes a person, again, who is age 60 or older, or a person who has a disability, the resource limit is $4,250. Resource limits, again, are set by the federal government and are also subject to change each October 1st. All right, there is a certification period for SNAP. So households approved for SNAP are assigned a certification period, and this period is a length of time that your household will receive benefits. In some cases, the certification period may end early if there's a change in circumstances that makes the household ineligible. So like receiving an increase in earned or unearned income. And most SNAP households will receive a 12-month certification period unless the household is experiencing homelessness, in which case the household will receive a 6-month certification period. SNAP households in which all members are elderly or disabled will receive a 24-month certification period if there is no earned income. And throughout the certification period, households are required to report specific changes. So if the household wishes to continue receiving SNAP at the end of the certification period, the household will need to complete the recertification process. And I had put a little hyperlink there to learn more about these requirements. All right, so TANF, or Temporary Assistance for Needy Families in the district. This program provides cash assistance for families in need, along with a suite of other services to facilitate their path to success. So families that are enrolled in the district's TANF program may receive benefits so long as they are income eligible and have a child in the home. TANF also offers access to a variety of supportive services that they can bundle together to meet their individual needs. The Department of Human Services employs a two-generation approach to reaching and serving families so that children and parents can rise together. And these are just some of the services that can be gained through TANF. So TANF Employment Program, or TEP, which provides coaching towards education and employment goals. They can also coach parents on the goals that they have for their children and families. Child care subsidy, which allows parents to enroll their children in quality childcare and including before and after care. Behavioral mental health and substance abuse support, which connects customers to the Department of Behavioral Health to obtain counseling to cope and manage behavioral, mental, and emotional and substance abuse issues for parents or their children. And tuition assistance program initiative for TANF, which is a financial assistance to enroll in post-secondary educational programs or professional certificate and or licensing programs. So there are certain requirements to be able to qualify for TANF. You must be a resident of the District of Columbia, either pregnant or responsible for a child under 19 years of age, a US citizen, legal alien, or permanent resident. You must meet the income requirements that are based on the household size. You must complete an orientation and assessment through the Office of Work Opportunity and develop an individual responsibility plan. Now, if you are approved for TANF, unless you are exempt, you must engage in a service provider with a service provider and maintain compliance with your IRP. Some customers enrolled in the TANF program may seek an exemption from work requirements, and examples of an exemption or reasons why you should have to meet these limits are being pregnant, having a child under the age of 1, or experiencing domestic violence, or having a physical disability that limits your ability to work. Okay, so there are certain income restrictions. The maximum income a family can have per application and still qualify for TANF depends on the family size and the childcare costs. And the maximum income a family can have is based on the household size below. So I put, it's actually down below, it's beside. You will see this chart, which goes by household size and the maximum income for them to qualify. And there is a resource requirement. So if a family has childcare costs, there is a maximum monthly income limit increased by $175 per child aged 2 or over, and $200 per child under the age of 2. Now, resource requirements are things like bank accounts, money market funds, certificates of deposit, and stock and bonds for households that have a resource limit. Households may have $2,000 in countable resources. If the household includes a person who is age 60 or older, the resources limit is $3,000. Now, if you apply for TANF in the district will review your information and determine whether you meet these resource requirements. Now, there have been some recent updates to the district's TANF program, so I'm just going to briefly go over those. Discontinuing time limits, so families can now receive benefits beyond the federal 60-month lifetime limit, increasing the cash benefits. So benefits levels received a cost of living adjustment, like I mentioned earlier, COLA. The cash grant was split between the parents and the children, and sanctions were redesigned. Enhancing employment and training services. So the TANF employment and training program providers engage in individualized coaching to reach employment and education goals, while also providing some to reach personal and family goals that facilitate success in the classroom and the job market. Providing bonuses, so now offering financial rewards in addition to monthly cash grants when education and employment goals are achieved, and engaging in the TEP in a meaningful way. And improving customer service. The Department of Human Services has made service center renovations and improvements and adjustments to operating hours, and they continue to evaluate ways to improve their way of delivering the customer experience. Okay. So SSI and SSDI, a lot of people don't know the difference between the two. So what you need to walk away with is that SSI is needs-based, and you may not have resources over $2,000 for individuals and $3,000 for couples. You must be an individual with a disability or an elderly person to access this money. Now, on the flip side of that, for SSI, you don't have to have ever worked before. But for SSDI, you not only have to have worked, you have to have worked and earned enough credits while working, paying into the system for you to access this money. Or in some cases, some people's parents have worked and paid into the system and they're accessing their money. But you must be a person with a disability to access this money. I didn't say an elderly person, because elderly person in this case that worked and paid into the system would access retirement. So we touched on cost of living adjustment a little earlier when we spoke about TANF, but cost of living adjustment. So COLA stands for cost of living adjustment and is an increase in benefits given to combat the rise in living expenses. So at the beginning of the year for Social Security, they announced an 8.7 cost of living adjustment for 2023, the highest they have ever had in history. So this raised the maximum federal benefit rate for supplemental security income, or SSI, from $841 to $914 for individuals, and from $1,261 to $1,371 for couples. Now, the maximum federal benefit rate is just the most that you can get in SSI. It doesn't mean that that's what you're going to get or that's your automatic payment. It means that that's the most. You can't get any higher than whatever that limit is at the time. Okay, a couple of things that you should know about SSI work incentives. The continuation of SSI, a lot of people think that once they start working, you automatically get your SSI cut, and that is not the case. If you work, you may be able to continue to receive payments until the earned income counted exceeds the SSI limits. And we already mentioned that the maximum federal benefit rate for SSI is $914 currently for individuals and $1,371 for couples. So your Medicaid may also continue even if you earn over SSI limits, if you cannot afford similar medical care and you depend on Medicaid in order to work. So what that means is, though, even though you may be working in, your cash benefits may have ceased because you are earning too much income to continue to receive cash benefits from SSI, it doesn't necessarily mean that your Medicaid will also cease. So for 2023, the threshold amount, or the amount that's used to decide if earnings are high enough to replace SSI and Medicaid benefits in the District of Columbia, is $56,523. So a PASS plan is a really good work incentive for people, especially who are trying to start their own business and get into the workforce that way. The plan to achieve self-support is a work incentive that allows SSI recipients to save money towards their vocational goals without penalty. The money cannot be SSI funds, and the vocational goal must lead to the beneficiary becoming self-sufficient. So in essence, I always give the example that if someone wanted to start a food truck and they were going to be able to buy this fully loaded food truck for $20,000. Now, I mentioned a little earlier that you can't have over $2,000 in resources without being penalized. So even though this food truck may be a great value in essence, if you can't save over $2,000, you really can't save $20,000 without being penalized. But the plan to achieve self-support, or the PASS plan, would allow you to set aside a certain amount of money that is not SSI, meaning money from SSDI or from a job, child support, pension payout, whatever it is that is not SSI. It would allow you to set aside a certain amount of that money towards this vocational goal, okay? And they will also send you your SSI money to live on. So that means that if prior to putting your money in this PASS plan, you weren't able to receive your full SSI benefits because you were earning too much, now your SSI payments should increase because the money that's being saved is not being counted against you. And that's across all programs, whether that's housing or food stamps and whatever, it's not counted against you. So, or if you happen to be a person who you weren't able to receive SSI cash payments, not because you didn't qualify, but because you were earning too much, now that money again is being saved for a specific purpose. So you should receive SSI payments. So for students with disabilities, scholarships and grants that are used to pay for tuition, books, and other expenses that are directly related to getting an education don't count as income if you're going to school or are in a training program. Now, you have to also keep in mind that even though these resources are not considered resources because they are used for your education, if you have tuition payments that are, or tuition that is $2,000, but you have a scholarship or a grant for $5,000, and you show up at the registrar's office and you say, oh, okay, well, I want to get my refund check back from the money that's left over from paying my tuition. If you take that money from the school and you now have that money in your possession, it will count as a resource. It's not going to be excused because it's not being used for the purpose it was intended in that moment, okay? And there are also things like student earned income exclusions. And this is a great work incentive for people who are high school, traditional college age students. So it caps at age 22. It allows them to exclude $2,220 of their monthly earnings up to a maximum of $8,950 a year when they start calculating their SSI cash payments. And knowing that most high school students and even some traditional college age students aren't really making a lot of money, meaning they don't have jobs where they're bringing in a lot of money. Some students are able to retain most, if not all, of their SSI in addition to their earnings. Now,
Dr. Seiler, we have about 1 more minute.
okay, great. Okay, so let me just speed through this real quick. Okay, so the value of work support. So for some SSDI, there are some SSDI work incentives that can be used as well, but I'm going to speed past all the rest of the work incentives. I can send that to you later just because I don't want to run out of time. A lot of these are similar. They're just for SSDI. Okay, the thing I really wanted to get to is just appeal and waiver rights. So if something happens to you, or something happens where Social Security makes a decision that you don't agree with, you do have rights to appeal those decisions. If you find yourself in overpayment, you can appeal it. Or you can file a waiver of collection as well, where you don't have to pay it back at all. There are several levels of appeal. So there's administrative review, and there's reconsideration, administrative law judge hearing, and appeals council review, and each have certain time periods that you have to go through them. So that is all. I'm going to end there. And I thought my contact information would pop up before the end. This was just my serious. So thank you. This is my contact information. If you want to reach out to me, 202-590-7533 or marquita.seiler@dc.gov. Thank you guys. Sorry for running over time.
That's okay. We'll make sure to put your contact information in the chat too. I wanted to just thank you for sharing we started with public benefits because a lot of individuals with disabilities are eligible for and do receive public benefits. And so it's an important aspect of financial planning to keep in mind. Before Susan moves us to our next speaker, I did want to ask a couple of quick questions. One is you shared about both SNAP and TANF benefits, which are things that, help people purchase food and give them extra cash. SSI and SSDI are also public cash benefits. Can people with disabilities receive both SSI or SSDI and TANF and SNAP benefits, or are those mutually exclusive?
No, they're not mutually exclusive. It depends on what your eligibility is as to whether you're going to receive more than one. Some people, their income precludes them from receiving one or the other, but some people are in a financial state where they can access more than one of these benefits.
And then I think you shared sort of what the max amount someone could make and still receive their Medicaid is. Could you share what the max amount each month or each year that someone could earn through a job and still receive their SSI and SSDI benefits?
Well, that's not the same. So there's not a number where you can say this is the max that you can earn, because every person's stuff is individual. So there are different work incentives that would bring down the amount of what an individual's earnings may be or accountable earnings may be. So it's really individualized. There is like a substantial gainful activity level that if you cross that, it will impact your SSDI. And then I already shared the maximum federal benefit rates or levels for SSI. And when you reach those, that's when they start looking at your SSI. But as I said, there are so many work incentives I didn't really get a chance to touch on, but those would bring down the countable amount of what Social Security would be looking at.
So I think what I hear you saying is it's very specific to your situation, how much you make, what kinds of needs you have, what your job is. And so they should reach out to you as a benefits counselor to ask those kinds of questions for their individual needs.
Yes.
Okay. Next presenter, Susan or Mark.
Awesome. Thank you so much. And thank you, Marquita, for that presentation. I just want all of the attendees to know that we will be posting these presentations under the DDC website, under the Bridging Aging and Community of Practice area on the website.
And I just want to say, we understand that this topic may be a little difficult. We understand that's why we are giving this brief intro, and we know we're not going to be able to answer all questions today. But the goal is really just to give people the awareness of the public benefits. And we know benefits counseling tends to not be the easiest to understand, but I think that's why it's important that you reach out or meet with a benefits counselor to speak on your own individual situation. Just wanted to share that.
Thank you so much, Mark. And next, it is our pleasure to introduce Miranda Kennedy. Miranda is the director of ABLE National Resource Center at the National Disability Institute. And Miranda is going to give us an overview of ABLE accounts. So thank you, Miranda.
Miranda, you're on mute if you're speaking.
Hello, everyone. It's so wonderful to be here with you. Yes, with pulling up the slide deck, being on mute. Yes, as mentioned, I'm Miranda Kennedy. It's so great to be on with all of you. Thank you for inviting me to join you today. The work you do is so important, and I'm really happy to be here with some information and some updates on a resource that you've hopefully heard about before, but I'm going to give you a little bit of an overview. and talk to you in particular about some tools that you can use and resources that we have for you. So you can really lean into that instead of having to become a PhD level experts on this topic. You can have a great resource at hand, which is Able National Resource Center has the Able National Resource Center website, which is chock full of information for you. We're going to be talking about the ABLE accounts. Achieving a Better Life Experience is what ABLE stands for. And hopefully you've all heard about this before. I am going to be covering today, as mentioned, I'm the director of the center. I'm going to be telling you just a little bit about our center and what we do. But then I have some information, you know, the what, when, why, where, hows of ABLE accounts. But what we do at the ABLE National Resource Center, it's really our goal to educate, promote, and support the positive impact that ABLE can make on the lives of millions of Americans with disabilities and their families. And it's going to be millions more with some legislation that was passed recently. But what we do, it's important to know that we are really a comprehensive source of information and that our information is objective and independent. We don't oversee ABLE accounts or ABLE programs. We're really here to provide education and outreach so more people are benefiting from these tax advantaged 529 ABLE savings accounts, which I'm going to talk to you about. So really what we're going to talk about is just introducing those accounts and answering the questions. What are those accounts? Who is ABLE eligible? Why are these accounts important? And how do people open, manage, fund, and use an ABLE account? And for all of you, you know, that information is going to be so important to those folks that you're serving, but we want you to also know where you can find resources to move forward and where those that you're serving can do so as well. So ABLE legislation and financial independence, let's talk about that for a moment, because that is really key. The Achieving a Better Life Experience, or ABLE Act, was signed into law on December 19th, 2014, and we've had other acts passed since then. It's a very evolving space. What the ABLE Act does is it's allowing states to create tax-advantaged ABLE accounts for eligible individuals with disabilities, and it allows millions of people with disabilities the opportunity to save above a $2,000 resource limit, while maintaining eligibility for needs-based benefits. So what is an ABLE account? So a person with a qualifying disability that began before age 26, they could be 90, but where they began before age 26, may open a tax-advantaged 529A or ABLE account in their own name. And that's really significant in terms of self-determination and being able to have that agency to direct where, you know, those funds go and what they're used for. But that ABLE account really makes it possible for folks to save and invest money from family, friends, employment, benefits, income tax refunds, and other sources. And to use those funds to pay for a wide range of qualified disability expenses, and also to maintain eligibility for federally funded needs-based benefits, although you don't have to be on those benefits to qualify for an ABLE account and benefit from them. I want to note that starting January 1st, 2026, as a result of the passage of the ABLE Age Adjustment Act, the ABLE age eligibility will go up to prior to age 46. So it's currently 26. Although you could be 90 and open an account if your disability started before 26. But in about 2.5 years, that age is going to go up, which will be significant. Currently, we estimate there's about 8 million people who are eligible for ABLE accounts, and that will raise it to 6 million more individuals who acquired their disability between 26 and 46. And that will also include 1 million veterans, we estimate. So who is ABLE eligible? So that tax advantaged ABLE savings and or investment account, because it could be either or both, is owned by that person who has a social security number or tax filing ID and has a disability or blindness. Right now, it's that began before age 26, and where they receive SSI or SSDI, or where they self-certify that they have a written and signed disability certification from a doctor. And we have this ABLE decision guide here, which is available on our website. Everything you see in blue is hyperlinked. So that's a nice little clue for you that it's a resource for you. You can lean into that and dive deeper on some of the topics I'm going pretty high on these slides here. So who can open that account? So that account can be opened at any age. We've got people, again, who are 90 who've opened an account, or by that person who has a disability. So by the person with a disability, as we talked about, it can also be opened, and this is the hierarchy. If that individual doesn't choose to open their own account or they need assistance in doing so, so they, of course, can open it if they have capacity, or they can select an eligible individual, which could be an agent under a power of attorney, a conservator, or a legal guardian can open an account, a spouse, parent, sibling, or grandparent, or a representative payee, which could be an individual or an organization. And that's the order in which. We also have this great decision guide here for you on selecting and opening an ABLE account. And those decision guides, they're kind of like choose your own adventures. You can go down the track that pertains to you or the person you're working with. So why are those accounts important? It won't surprise anyone. We all know this. Households containing an adult with well, you might not know this, but there's certainly significant extra costs when living with a disability. And some of the details we have for you, and this has just recently been updated. So those households that contain an adult with a work disability require on average 29% more income. And that equates to, on average, an additional $18,322 a year at the median household income to obtain the same standard of living as a comparable household without a member with a disability. And an ABLE account can significantly help in covering many of these extra costs. And I've cited the work we pulled that from here for you. And that was from our founder at National Disability Institute, which is the parent organization over the ABLE National Resource Center. So this is the most technical slide for all of you, perhaps, that's on the slide and not in one of those decision guides, but I thought it's important to point out people can get this, have misinformation or information that's just a little bit out of date. So this is the current information here. Up to $100,000 in savings within an ABLE account is disregarded as a resource and will not affect supplemental security income. For folks who go above that, it just means that the monthly SSI check is suspended until the savings in the ABLE account drop down below that $100,000 threshold. So that's important to know. And any amount of ABLE savings up to the plan limit, which can be between $235,000 or $550,000, depending on the plan someone chooses, will not affect eligibility for Social Security and Disability Insurance, HUD, SNAP, FAFSA, that free application for federal student aid, Medicare Parts A, B, C, or D, Medicare savings programs, and extra help, or any type of Medicaid benefit, including Medicaid waiver services. There's more to this one in particular. So we have a great decision guide that goes into a lot more and will answer many of your other questions about this, including what's covered on this slide. And you can click on that. It's Understanding ABLE Account Savings and Public Benefits. And we developed that with leadership who has joined our team from Social Security Administration after they retired after a 35-year career. So we've got some great information there. Why are ABLE accounts important? There are so many tax advantages. The account balance, principal, and income can be invested through a variety of options offered by an ABLE program. This allows someone with a disability to be able to actually have their money grow for them. There's also the opportunity, there can be those losses, but it really lays down the playing field and makes things equal where people can engage in that opportunity to potentially invest and grow their money. And that investment growth, it is tax-free when it's used for qualified disability expenses, which are very broad. I'll talk about that next. And funds can be withdrawn at any time from an ABLE investment options without penalty. Contributions into ABLE from family, friends, a special needs or pooled trust, or a 529 college savings plan rollover do not count as income by federally funded needs tested benefit programs. So there are over 45 state ABLE programs that offer ABLE accounts from which to choose. One of those states might be turning green again soon, and one of the others that is grayed out because it doesn't have an ABLE program just contacted me the other day. So this map is turning greener and greener, and all those states that are in green on the slides offer an ABLE account. And many of those states are open to out-of-state residents as well as in-state residents. We always encourage people to look at their in-state program first. Oftentimes there's state level legislation that can incentivize and support someone in opening an ABLE account in the state they live, but there's a lot of opportunity and choice here again. So there might be a different ABLE program that has, you know, better features that better meet your needs or that you're interested in checking out. You can roll over. If you go with one and decide to roll over to another, you can certainly switch. Rollovers are allowed. We have our ABLE program comparison tools. I encourage you to use these and share our comparison tools and our ability on our site to directly connect people to the state of their choosing. Quick tip, if someone Googles the name of their state and ABLE program, it might route them to a state that is not their own, but that takes residents of their state, and then they miss out on maybe getting the benefits of the program they chose. So that's really important to know. It's why we have a really independent site, and it can serve as a little bit better than a search engine would, which we've heard people who've had to do rollovers or be a little confused. We want to cut through that confusion, use these resources on our site. We just got ABLE program updates, and they've been updated as of this week. So great new updates on what programs are offering. So how do you open and manage an account? Most accounts are opened online. If you're in Maine, you can walk into a bank, but most are opened online, and you can contact specific ABLE plans for alternatives if needed. Once the account is open, the account owner, that person with the disability, can choose to allow others to access various levels of information about the account and or to take specified actions on the account. And we have those two decision guides: selecting and opening an ABLE account and managing your ABLE account. Because once you've opened it, we want you to be able to make the most of it. And, you know, that previous slide, it could be hard to choose. So selecting which one's the best for you, we do have those resources for you. So how do people fund an ABLE account? So this year, the annual total was raised to $17,000 annually, which can be contributed into the ABLE account by the person with a disability or from family and friends. Special needs are pooled trust, a 529 college savings account rollover. Additionally, an ABLE account owner who resides in the US and works and does not participate in an employer-sponsored retirement plan within that calendar year can contribute up to an additional $13,590 on top of that $17,000 from their earnings into their ABLE account. Really important to know. People need to be accessing their benefits advisor, their CWIC, as they're doing that, because those it could still count against those earnings. They can't just go into the ABLE account and not be considered when considering eligibility for those other programs. So there's that interface there, which is important to consider. And that amount's higher for residents of Alaska and Hawaii because it's more expensive to live there. And if people are wondering, hey, how do I even fund that? How do I come up with that $17,000? We have yet again another great tool, ABLE Decision Guide, how to find funds to save in an ABLE account. Currently, the average amount of money in an ABLE account is just under $10,000. And people have certainly saved and used funds in those accounts. So, but that's where it lies currently, which is on average $8,000 more than that $2,000 limit. So what can you save for and purchase with an ABLE account? ABLE funds can be used for items or services that relate to the person's disability or blindness and are at the benefit of that beneficiary and that relate to maintaining or improving their health, independence, or quality of life, which is so broad. And it's meant to be broad. We've talked to the IRS so many times about that. People have asked for, can you just give us a list of items? And they're not interested in doing that. But I have some categories for you here on the next slide. But it's important that those qualified disability expenses, which are what they're called, and it's interesting, it's not disability related expenses, right? It doesn't have to be related to your disability because it can just be about improving your health, independence, or quality of life. So those expenses don't have to be for meeting a medical necessity or something related to the disability. And those expenses, they can still benefit others in addition to the person themselves. So you don't have to worry about limiting them to expenses that provide no benefit to others. So for instance, someone purchases a vehicle or an accessible vehicle or a down payment on a home or improvements. Other people can ride or drive that vehicle, live in that home, and so forth. those are just a few examples. And on this slide, we have categories for those QDs. These are broad categories within which those expenses can be considered. And I know time-wise, I'm not going to go through those categories, but they're pretty broad. And also keeping in mind, that one in particular, basic living expenses, including food and shelter. I'm going to mention that and emphasize it really because so if someone has a special needs trust or pooled trust that funds are going into that ABLE account, or someone has an ABLE account and a special needs trust or pooled trust, those basic living expenses might be able to cover things that the trust cannot, food, shelter, and so forth. And the reason I also mentioned that we did a decision guide, it's on that slide deck, that it's good for you to know with the Special Needs Alliance that our decision guide is ABLE accounts, special needs trusts, and pooled trusts. And what you'll see there is that you can have one or the other or both. And the Special Needs Alliance, a National Alliance of Special Needs Attorneys, developed that decision guide with us. So these are really meant to be so broad. And we, again, have a determining whether something is a QDE decision guide to help folks. And it just covers the whole arc of life, right? Kind of cradle to grave, anything in between, including employment, how to get around, housing, education, anything that might not be covered by other services or supports. So this is really not meant to take the place of, but to augment. I want to mention, I just had this one next slide and then we'll get into some resources, but we do have some additional reasons to save an ABLE account. It can help eliminate the need to spend down, which we hear all the time. Instead, save those funds in an ABLE account. That can be really a game changer for folks. Those ABLE deposits can reduce countable resources, allowing for SSI and Medicaid eligibility. And there's no look back for contributions made to an ABLE account for Medicaid eligibility. And it provides a tool to save, to purchase those assets, those resources, those services and supports. It can be for emergencies. It can supplement so many other things. One example we have is, someone might be getting some job coaching, but they want to pay for more of that. You can use your ABLE account for that. It can augment many things like this. And now the last
Hey,
couple
Miranda.
I have are just our resources. Yep. We have a number
Miranda,
of
we have
resources.
one more minute.
Sure. Yep. That's all I need. So it's good timing right there. So here we have a slide that shows some of the faces of some of our ambassadors who've worked with us, account owners and family members who shared their stories and strategies. And this is a link you can go to check those out. We also use those folks. They present and give information and go out within their networks and across the country. You hear from them a lot, including during our Able to Save event, which is next April. We hope you'll help promote that. All of our decision guides are listed here, including direct links to those. There's a wealth of those and they grow all the time. And they're really meant to help increase understanding and help make effective decisions around decision guides. And then here's a number of other tools. I do want to mention, because I know with your DEI work there, we do have a toolkit on outreach to communities of color that we developed with ABLE ambassadors who are members of communities of color. So check that out along with our podcasts and webinars. Sign up for our newsletter and just follow along. And I think just here's our links to follow us on social media and sign up. And thank you so much for having me. I really appreciate the persistence from Sean and Mark and Susan in getting me on today. I'll hand it back to you.
Thank you, Miranda. We really appreciate it. I will say that I've spent a lot of time on the ABLE National Resource Center website because literally every question you could possibly ever have about ABLE accounts is answered somewhere on that website. And all those links that Miranda gave you in the presentation, which you'll all get later, will help you find all of those things. So I highly, highly, highly encourage you all to really utilize the ABLE National Resource Center. It can be hard to find things on some websites, but their website's set up really, really easy to use. So I encourage you to use
real
it.
quick, I want to mention it's great to hear that because we're planning on doing a refresh because it's a little bit too full of information right now. So I want to give all of you just a real quick, if you have questions and you're spending more than 5 minutes on our site looking for where is that, Don't spend more than 5 minutes. Just email info@avelnrc.org. We'll get back to you within a day or two, or sometimes the same day. So thank you for having us, and have a great rest of your day, everyone.
Thanks. Okay, Susan, we'll go to the next presenter.
Sure. And I think thank you again, Miranda. I think you did a good job of kind of introducing what our next presenter is going to talk about. And so you spoke a lot about special needs trusts, and we are lucky to be joined by Miss Yolanda, who is the CEO of Shared Horizons. So welcome, Yolanda.
Awesome. I'm going to share my screen, correct? I have that capability. Awesome. Hello, everyone. I want to make sure that you can see my screen. Yes?
Yes, we can.
Awesome. So my name is Yolanda Mazik, as Susan did recently just shared. And I'm the CEO of Shared Horizons. And first of all, I just want to thank DDS and Quality Trust and RCM and the folks that put this together. It took a lot. I was on the call prior to, and it just took a lot with the interpreters. So kudos for you all bringing this together and coordinating this. So you've learned about public benefits. You've learned about the ABLE account. And Shared Horizons is the nonprofit organization created to manage the Pooled Special Needs Trust. So we're going to briefly just talk about, and I'm going to pass through a lot of the slides because a lot of them just reiterates what was already shared with you all earlier from the presenters earlier. So I want to talk first about what is a special needs trust. A trust is a legal arrangement between a person and another entity that will hold, whether it's property or assets, for another person. And a special needs trust is a special needs or a trust that Social Security and Medicaid actually approved, that will preserve the person's eligibility for means-tested benefits. And I'm just going to briefly go over what those means-tested benefits are. And you probably already know, so supplemental security income, or SSI, Medicaid, and subsidized housing, along with TANF. And you've talked about that, or the benefits person talked about that earlier. So all of those are means-tested benefits that will that you have to be careful of your income as well as the assets that you have in your total bank accounts. And the goal is to make sure that you're able to keep as much of your earned incomes or inherited income as possible, or your assets, to ensure that you can fully enjoy them. And that's, I think, the purpose of this presentation today. So just briefly, cash benefits, not means-tested SSI and Medicaid. When you think about a pooled special needs trust, you think about any benefit that you have that is means-tested, and you find that you are over those asset limits, and if you have too much money to put in an ABLE account, because we know that ABLE has a limit per year of $17,000. But there are some of you that may run into or may benefit from a windfall, from Medicaid pay or SSI payback or back payment, that you find that you're over-resourced and way over the $17,000 that you are allowed to transfer into your ABLE account. So it's an opportunity for you to move forward with establishing a special needs trust if you have the SSI. And then, of course, the means-tested benefit that we're talking about that your pooled special needs trust can protect against is your state Medicaid, and of course, housing. And if you do have housing, housing has their own set of rules, just as Medicaid and SSI, and we have to follow those rules when making disbursements from the trust. So I'm going to pause just for a moment before I move on to the next slide, because I really want everyone to understand that as a special needs trust or fiduciary, we encourage everyone, if you can, to establish an ABLE account, because as the young lady that spoke prior to me mentioned, that the ABLE account will allow you to pay for things that if the trust paid for it, a special needs trust paid for it, then it may reduce your benefit, whether it's SSI or it may impact your Medicaid. So we want to make sure that all of our beneficiaries that come to us understand that you definitely, if you can, should establish an ABLE account, and then use the trust as an opportunity to feed into that ABLE account, or to actually move forward with helping you manage your assets that you have if you have a difficult time managing it on your own. So is this legal? Yeah, it is legal. Special needs trusts became eligible or were adopted under the Omnibus Budget Reconciliation Act of 1993, and we call it for short OBRA 93, where Congress created 3 exceptions to the rule for counting assets. The first is an individual special needs trust, meaning that you have enough assets that you want to hire an attorney to draft a document that can either be self-settled, meaning the person with the disability has ownership of the assets, or it can be third party, meaning a parent, grandparent, or any other third party can establish that trust or on behalf of the person with a disability and leave assets to them without impacting their public benefits. And then there's the Miller Trust for retirees. Or DC nor Maryland really recognize the Miller Trust. And then you have the Pooled Special Needs Trust, of which Shared Horizons serves as the fiduciary. I want to also share that we also manage individuals' standalone trusts as well. But all of the trusts above have to and must adhere to the sole benefit rule. And it has to have a Medicaid payback language. The sole benefit rule simply states that Social Security says if you're receiving SSI and you have a special needs trust, the trust can only make disbursements for the sole benefit of the person receiving the benefits. And we have to adhere to that. When we don't adhere to that, then that means that the funds in the trust can be counted when determining your eligibility to continue to receive those benefits. And that's really important to us, which is why if you do have a special needs trust, whether you're using Shared Horizons or another special needs trust, you got to make sure that they understand the rules that Social Security provide, as well as Medicaid and housing, because you don't want any of the distributions or disbursements from the trust to impact your benefits. And of course, the other piece that every special needs trust must have is that it has to have payback, Medicaid payback language. And just briefly, I'm going to share that language just simply applies if the person that the trust is established for, and it is a self-settled trust, that first party trust, whether it is an individual trust or pooled, that person is the owner of that money until it transfers into the trust. So they're using their own money to transfer into the special needs trust. Medicaid and Social Security states that in order for them to put their stamp of approval that the money in the trust will not count against any public benefits the person is receiving, that trust has to have Medicaid payback language, which states that if the person that the trust is for passes away and money remains in the trust, Medicaid has a right to claw back or to put a lien on whatever remains in the trust, up to what they paid on behalf of the person. And that's an important piece of information. And I want to also make sure that, and perhaps the director of ABLE can maybe put in the chat whether there is a Medicaid payback language for ABLE accounts should the person the ABLE account is established for passes away. So people can choose from the 3 different trusts. Well, yes and no. Maryland and DC, they don't, as I mentioned, they don't recognize the Miller Trust option, but the 2 remaining can. The individual trust, I already mentioned, can be established by, you have to hire the attorney to draft the document, and the document is submitted for approval by Social Security and Office of Attorney General, State Medicaid Department. And then you have to find the trustee. But for the pooled special needs trust, all of that is already done. We already have the master trust document that's been pre-approved by Social Security and Medicaid. And all you have to do is complete a joinder agreement and sign it to be part of the master trust that's already been established and approved by Social Security and Medicaid. And the nonprofit serves as the trustee. And that's important for everyone to understand, that once you establish a trust, special needs trust, and you transfer your assets in, it is irrevocable. And the person that the trust is for, they cannot dictate to the trustee how to use the trust. They can participate in what we call, and I'm going to talk a little bit more about this, a quality of life plan, to come up with a plan to move forward with how the trust will be used, but they can't dictate how disbursements are made. Otherwise, Social Security and Medicaid would count the money in the trust because the person still has ownership and can determine how the trust can be utilized. And again, the trust can either be self-funded, first party, or third party funded. Okay, so you have a trust, now what? So if you join Shared Horizons, once you join the trust and once it is funded, and you can use any funds to fund the trust, as long as those trusts, if it's the self-funded, belong to you. And let me just talk a little bit about where those funds may come from. We have a number of beneficiaries in DC that may receive an inheritance from a sale of property, from a loved one that recently passed away, that wants to give or provide from their will assets to support the person with the disability. We've had folks win the lottery that we had to go down to the lottery board to retrieve the funds and provide our packet of information and sign joinder agreement. It can be from any assets that can come in, whether it is from settlement, from a lawsuit, any kind of assets that will be passed down to you can be transferred into the trust. You can also transfer, if you have a back payment from Social Security, you can actually transfer those assets in. But let me also share, if you do have a back payment or you receive a back payment and it takes you over the asset limit, Social Security, unless they've recently changed this, will allow you 9 months to spend that down. But we have some folks that receive that back payment and they really don't have the needs to spend that down within the 9 months. So they then choose to establish a self-funded special needs trust within the pool. And again, those are folks that if they come to us with that need, we will ask them the question, how old were you when you first were diagnosed with a disability? And is it possible for you, if it's under $17,000, just establish an ABLE account and you can transfer it in? If it is no for those questions, then we move forward with yes, then the pooled special needs trust may be a good option for you. So once it's funded, then the next thing we do is we forward you a welcome packet we develop then a trust plan or a quality of life plan. And we review the rules for each government benefit you're receiving. We discuss your needs and your wants. It's not just about what your needs are, although I will say that we want to look at what your needs are that are not covered by the current benefits you're receiving, so that we can supplement those first. And then we look at your wants, your desires, your special vacation that you want, the equipment, the equipment that you just want to have in your home that is not covered by Medicaid, your any needs and any wants that you may have. We take a look and we help you think outside the box. We have a number of beneficiaries when we say, you know, you have some, we don't want, if you're using a wheelchair, we don't want your muscles to atrophy. So we can schedule for you a regular physical therapist or a massage therapy to help your muscles remain active, and so that, you know, that's something that the trust can pay. So we actually try to help you think outside the box for things that you really may not have thought about, or you thought was out of the question because you didn't have the assets. But we're here to enhance your quality of life as much as possible. And then we also want to identify your support network, because it's important for us, because we are part of the team. It is important for us to understand what other supports you have. And it's important for your supports to understand, or the folks that are supporting you to understand, that we are here. And if they are trying to figure out a means to get a special service for you or items for you, that we want to be part of that network, part of that team discussion, so that we can say, hey, you know, we don't have to really focus on this. If there's no other means to pay for whatever they need, then the trust can certainly step in, and we can make that happen. And then we review the disbursement process. And then from there, from all of that, from that quality of life plan, we develop what we call a budget. And that budget is something that we will work with our beneficiary, first of all, to help them understand what the budget is. And if the beneficiary has a guardian, then we work with the guardian to develop all of the quality of life plan, as well as the budget. And then from there, you know, you make requests that will enhance your life. So disbursements, nothing basic here. The disbursements from the trust is dictated by the benefit that you are receiving. So each benefit has their rules. So if you're receiving SSI, SSI prohibits payments for basic needs. And I used to have housing and cash and food, but there is under review, Social Security, they are looking to remove food from a distribution from the basic needs category. So I took it out, hopefully thinking that they will quickly pass that. But for now, we are still prohibited for paying for food, but hopefully that will
I'm
change.
sorry, Yolanda, our ASL interpreters, we have a hard stop at 1:15. So I just wanted to give you that heads up.
Awesome, awesome. And, oh, okay, we're already at 1:16. So sorry,
No
but
worries.
anyway, yep. So again, I wanted to make sure that also in my slide that you can look at special needs trust as well as the ABLE accounts side by side. Again, it's the best of both worlds. The S&T and the ABLE accounts work in tandem together. And with that, I'm done. If you have any questions, you can either visit our website or send me an email, and we would be happy to assist.
Thanks, Mara. I was about to give that 1 minute warning. Yes, we started a little late, so I gave everyone a little extra time to present, and I apologize for that. Interpreters, we appreciate you all being here today. There were a couple of questions we'd hope to ask, but since we're at time, we'll go ahead and end for today. Thank you everyone for coming. A reminder that all of the slides from last week and this week and next week will be on the DD Council's website in their Bridging Aging and Disabilities project section. Susan put the link in the chat. And we will be speaking next week on decision-making and legal issues around decision-making. We hope you'll all join us. Mark, Susan, if there are any last comments you guys want to make, I just want to thank everyone for coming.
No, thank you. Thank you all. And we look forward to seeing you all next week on August 15th from 12 to 1:15. Thank you all. Have a great rest of your week.